to the What Bitcoin Did podcast.
Hello and welcome to the 5th episode of the What Bitcoin Did podcast. My name is Peter McCormack and I am a crypto asset investor and miner. With this podcast, I am always looking to meet with some of the brightest people within the crypto economy to discuss things which help us all improve as traders, and what a brutal few weeks it has been in the market. I know the depth of this correction caught many of us off guard. Not all, but many of us. And for me, it has been a real lesson in managing risk and capital. As such, I am making a whole bunch of changes to my strategy to reflect this, which I will share on my website and social media once ready. And one of the things I'm working hard at is my technical analysis skills. So I need to say thanks to a few people who've been helping me. Firstly, at Day Trader Nick, I met with him on the podcast, and ever since then he has always been there to give me some help and guidance. I am sending him questions all the time and he always gets back to me. So big thanks, Nick. And then a few other people, Crypto Cred, Crypto Kevin and Parabolic Trav, a few guys I've been discussing things with on Twitter, and they've all responded and helped. So big thanks to those guys. With TA, what I'm trying to do is focus on simplicity, and I'm quite into price action. So I've been reading up a bunch of that and simplifying my charts just so I can get a better picture of why the market moves in the way it does, so to help me make better trades. And listen, guys, if you're not following the guys I mentioned, please do. I highly recommend you also check out Crypto Cred's free tutorials, which you can see on his Twitter page. And he has a tip jar, so if you do use them, I advise you give him a nice tip. I am very bullish with the market. I really loved the Senate testimony on cryptocurrencies, as it shows that America is now ready to open the door to these investments, as long as they sit within the regulatory framework, which I have regularly said, if we get regulation, this is validation, and this opens the doors for institutional investors to play in this space more. If you listened into the last podcast, I hope you enjoyed it, the one with Mike Jones. I felt that Mike opened my eyes to the reality of how we value these crypto assets, and I think as traders we need to spend more time looking under the hood of this and understanding where the intrinsic value is. We are still arguably in a bull market, but there will come a time in the future when the economic value of these assets will be tested, and there is a chance that many are currently overpriced. That said, we are still in speculation stage. There is money to be made, just like in the first wave of the dot-com boom, but there is inherent risk. Those who went to the market in late November, you've had a pretty painful introduction to crypto, and these crashes will keep happening, and there is a chance we will get a much bigger correction at some point. So with this week's guest, I've got another great person to follow on from Mike. I have another guy within the venture space, a chap called Jamie Burke, who is the CEO of Outlier Ventures. They first came on my radar when I saw an interview with Jamie on CNBC's Squawk Box, where he discussed how Outlier Ventures are taking a more long-term view on their investments. When I researched Outlier, I noticed they had also hired a head of crypto economics. They were the first VC to do so. This really stood out to me, and I knew I wanted to sit down and have a chat with Jamie. I'm always going on about how important it is for us to get an understanding of the real value of these assets, and I felt that Jamie would be a great addition to the podcast, and he agreed to come on, so I'm really grateful to him for this. In other news, my mining rigs are hashing away, and I mined my first full Bitcoin, which is very cool. I also have a second rig of S9s about to be delivered. I got myself a Seer coin miner, and my Dragon Mints are now only a couple of months away. I am not a tech expert. I couldn't have done this without my buddy Chad, and I have now written something on my blog about how this all happened if you want to take a look. If you have any questions about mining, please do reach out to me, though I may put you in touch with Chad. Lastly, I am getting back into the swing of writing content on the blog. Those who follow it will have seen a few new articles recently. If there's anything you want me to specifically write about, feel free to get in touch. And I need to say a big thank you to my old school friend Tom, who has been helping me out with this. And as ever, if you want to support the show, there are a few things you can do. You can leave a review on iTunes, hopefully 5-star if you think it deserves it. You can also follow me on Twitter, Instagram, Medium, or Steemit. My handle is always at whatbitcoindid. You can check out the website and sign up for the newsletter. That's www.whatbitcoindid.com, and you can share this with your friends. Okay, so let's move on to the interview with Jamie. Please take your time, listen closely. Jamie is a super smart guy. He has a great macro view on the market. He discusses in detail with me the economic reality of the assets that they are invested in and why crypto asset valuation is so important. I hope you enjoy the show. Please reach out to me if you have any questions. And if you want to come on the show, I am always looking for new and interesting people. Okay, I hope you enjoy it. Hi, Jamie. Thank you for having me here in your office to do this. In planning this interview, I looked at your LinkedIn and saw that you had an agency background, digital agencies. Can you talk me through the journey from that to now being the CEO of a blockchain-based venture firm?
Yeah. So originally started out in communications, worked in WPP, and was a kind of digital strategist planner. Actually, when I started out there, it was kind of just before Web 2 was kicking off and the social web and all that kind of stuff. And all the old dudes in there kind of looked around, and none of them were on Facebook, none of them knew what MySpace was or Twitter. So as is common in these things, they kind of pull in the only person who knows what it's about, who's often one of the younger people in the organisation. And then before you know it, I was inviting in Facebook to present to the whole group with all the account directors and a lot of large accounts within JWT. And that kind of kick-started the journey, really, and ended up, fortunately, that kind of fast-tracked things for me. So I ended up setting up agencies for other people. And I have no concept of time now, to be honest with you. The crypto world's destroyed any concept of time. But at some point, I ended up setting up a consultancy and kind of grew that into a 100-person outfit working with blue chips like Honda, MasterCard, Tesco on digital innovation, change management, and stuff like that. So exited from that and ended up becoming an angel investor. And it was that journey as an angel investor that led me into initially Bitcoin. Well, I guess it's over 4 years ago now, something like that. And then increasingly became convinced that all of this stuff represented the next phase of the web, and was something that I wanted to kind of dedicate time and capital to learning about. And
on the Outlier website, you refer to Web 3. So you've just talked about Web 2, Web 3. So what does Web 3 mean to you?
Yeah, so when I looked at Bitcoin and the Bitcoin blockchain, and of course the emergence of Ethereum and smart contracts, the combination of these technologies, so distributed ledgers, cryptographically secure and unique digital assets where you can introduce scarcity, and smart contracts, kind of the combination of all these things for me meant that you could enable a web actually that was closer to the original vision of Tim Berners-Lee, which was a more peer-to-peer web commons. And obviously the way that Web 2 was financed, you end up with these kind of platform monopolies. And actually not that much disruption happening. It disrupted e-commerce and media, but a lot of other industries are perfectly intact. And so, when you look at Web 3, these technologies enabled a more decentralized web. And the important thing for me is decentralized is a spectrum. It's not either or. You're not centralized or decentralized. It's where on the spectrum is it sensible for that particular function, business use case. It would create a more truer peer-to-peer environment, so removing intermediaries, and peer-to-peer can also include a machine-to-machine, which was a particular focus for Outlier now, or autonomous agent to autonomous agent, as we're introducing bots and AI. And linked to that, this would be an increasingly automated environment, and then potentially having kind of autonomous entities. Obviously, DAO is the kind of first attempt at that, but the principle of having these kind of self-governing, intelligent systems is kind of what was most interesting to me. So that's kind of how I describe Web3, and that's kind of that's the context, the lens through which we look at the emerging stack that's happening now.
So there's specific categories of decentralized businesses and blockchain businesses you're looking at. You talk about AI on the website, you talk about fintech, there's like a service for?
Yeah. So basically, so our thesis that we've developed over the last 4 years, Outlier Ventures was set up 4 years ago.
Okay. During the crash of just after MT Gox or something?
Yeah, so, again, I forget the exact date, but I know we had our Christmas party and we were going, it's probably about 4 years since we began the journey. When we initially began, I brought on a co-founder, a Dutch guy called Aaron van Ammers, who's our kind of CTO, and pretty much put aside some money to underwrite him and a team of developers learning about the space, exploring and playing with the tech and getting applied learning. At the time, the vision was to be what Outlier is today, but at the point, in reality, there was nothing to invest in.
Did you finance the whole thing, or did you have outside investors join?
Yeah, so up until probably 18 months ago, I financed it myself. I was prepared to underwrite it for probably about 4 years. Fortunately, I didn't have to do that. Things kind of kicked off a little bit quicker than I'd hoped. And so what Outlier now is an LLP partnership. We've got, I think it's 16 partners.
Okay.
A lot of them are ex-bankers, a lot of them semi-retired, retired. And then kind of collectively, we've been deploying capital. So initially, we were kind of looking at these equity-based investments, and there wasn't really much out there. And the reality is, what was out there was trying to build on things like Ethereum at the application layer. When Ethereum, still to this day, a lot of the infrastructure is just not there to support these use cases. Over that time period, we spoke to 1,500 blockchain startups.
Wow.
And we actually put them in a tracker. It's online somewhere. You can have a look at them, categorize them by geography, country. So we spoke to startups from Kenya to Tokyo to Toronto, all different kind of use cases. And in large part, when we were looking at them, we became convinced, A, the infrastructure wasn't really there to support them, and B, there was this kind of unease that a lot of these entities were trying to build proprietary businesses in effectively an open source environment.
Okay.
And it was the elephant in the room that we were kind of ignoring, they were ignoring. Everyone thought, well, we'll figure it out. Fortunately, we did figure it out. The emergent model of tokenizations come about, but at the time, there was this growing unease. I actually wrote a fairly infamous blog post called 99% of blockchain startups are bullshit, which kind of articulated that. But what was interesting throughout that period, we started to see, again, I think it's probably not last year, the year before, we started to see non-blockchain startups, so startups from, say, AI or IoT or 3D printing going, this stack that I just talked about, this Web3 stack, actually solves a lot of our problems of scaling our technology securely. For AI, how do you unlock data? How do you break it out of data silos in a way that you can kind of compete with the AI monoliths that have that data advantage? In 3D printing, how can you secure a 3D CAD file as a digital asset and ensure its integrity so it can't be copied or duplicated, all the way down to the printer. So the printer's a wallet, the CAD file's a digital asset, and the printer has to kind of transact on a ledger, and you can do all kinds of IP distribution. So stuff like that was most interesting. And when you start looking at the use cases of distributed ledger technology being used to secure AI, 3D printing, it goes into autonomous robotics, drones, decentralized drone networks. Increasingly, you end up in an environment where you're looking at more B2B use cases. So you're looking at Industry 4.0, which was born out of Germany, all the industrialists there, looking at how do they do industrial IoT, how can they secure supply chains, how can they make more autonomous.
Sounds very German.
Yeah, very, very German. Yeah, absolutely. And they're, world leading in actually the adoption of blockchain and AI now as a market. So firstly, it was securing these individual kind of deep tech plays. But then interestingly, we started to see combinations of these technologies. So once it almost becomes this shared infrastructure, and whilst different protocols may be used to service those technologies or the digital economy for, say, 3D printing compared to industrial IoT, because there are similarities, it creates this interoperability. And so increasingly you can see use cases. We started to invest in use cases where you would have practically every buzzword going. So you'd have somebody that was wanting to create a decentralized command and control for fleets of drones, so autonomous drones, for data collection. So it's IoT, autonomous robotics drones, blockchain, and AI, So, so that was kind of really interesting for us. It was kind of blue ocean. So whilst everyone was looking at financial services use cases, we thought, well, actually, nobody's really looking here, and this is something that we can own. And so that's where we focused Outlier's attention over the last 18 months to 2 years, engaging that corporate ecosystem. So people like Bosch, Siemens, BMW, Daimler, as well as entities like Virgin Group, Samsung, and what have you, to say, okay, how can convergence be relevant to your business and your supply chains? And it's with those kind of institutions that we do a lot of co-investment with.
So as some people will look at the speculative bubble we're in and look at it being bad and have negative kind of views on it. But actually, has that been good for you in that it's opened doors, it's made it easier to raise money? Has that been a good thing for Outlier in some ways?
Well, look, I think 2017 was a great year for everybody in crypto, almost indiscriminately. You didn't even really have to be doing anything of any value, and you still probably would have had a good year. I think 2018 is going to be very different. I'm personally frustrated that, for somebody that's been in the space for 4 years now, and is very much focused on value creation. Everyone's done very well from the speculative aspect of it, but I think it's kind of run ahead of itself, which is normal, right? So, a bubble is basically where capital is laying the foundation for a technical innovation that it can't yet quantify. And so everybody knows that this stuff, all these use cases that we talk about, that people are trying to build on an Ethereum or whatever, that's a little bit too early, they will happen. These things will happen. It's just not right now for a number of reasons. The infrastructure's not there. So where we're investing in infrastructure, pretty much infrastructure only. So we're not investing in app tokens or anything like that. We're investing where there is a technical innovation which we believe evolves this kind of next generation thinking about how distributed ledgers, whether it's DAGs or whatever, can be leveraged to secure something like industrial IoT in the case of IOTA. So we're making long-term investments, and so it doesn't really matter to us the state of the market. Obviously, it impacts how much capital can be raised by these things that we're involved in. But to be honest with you, everyone was raising too much money anyway. It's nobody needs that level of capital. It's very few use cases where you need that level of capital. So, and it creates a misalignment of incentives and perverts or corrupts the kind of innovation cycle. But so things like McAfee's token of the week, I just can't stand. I think it's everything that's wrong with the industry, and the worst thing is it works, right? Because and really that highlights where we are in the market at the moment. So I was doing a panel for Reuters with a room full of hedge funds. It was standing room only. They normally have 50 shirts, like 350.
Right.
and they're all piling in because they love volatility, right? They don't care whether it's going up or down. Obviously, there's more ways to get exposure to down now, with new instruments coming onto the market. But they love volatility, you know, so they proactively look for emerging markets and stuff like that. So I think all that interest is going to break the market at some point this year.
Potentially bring in regulation.
I think they're separate because I don't think it's still not anywhere near the scale that it's of a systemic risk to any one economy, unless you're probably looking at South Korea. I think 1 in 3 people hold crypto.
Right.
Maybe there it's a risk. But on the whole, you know, it's a blip really. It's the size of a capital market. I wrote a post a week ago where I called for 50% haircut. Actually, 75% probably more where we should be. But all that's happening in the market at the moment is momentum trading, and you know, people are trying to either preempt a direction or they create it. Right, it's a very opaque market. It's very open to manipulation. But as is, you know, many commodities, small commodities markets, by the way, you speak to any commodities trader, they've been doing it for years.
Yep.
So it's not inherent to crypto. It's what happens when you've got a small market, thin liquidity. It's very easy to move the dial.
Especially with a market maker with deep pockets.
Well, exactly. And it's a great dark market, right?
Yep.
You know, you can do lots of OTC trading. And so, you know, the kind of old school traders love this market. My concern with it is that for those of us that are trying to build value, when the crash happens, and there will be a crash, I think it will be this year, but it's, you know, never try to call the top. But
what is a crash, right? Because we've done 50% this week.
Yeah, well,
we've never had that in a stock market. That would be the end of the world.
Yeah, well, and it's quite normal in this space, right? I think how sustained is it?
Yeah.
This one feels quite sustained, which is good. I think it's a positive thing. I always felt that, you know, 80% and sustained for like three. I can never see it going for more than 3 months.
No.
But you know, 3 months, have a mini kind of crypto winter at some part this year, where a lot of the tokens that are just being used purely for speculative trading. So, you know, Dogecoin is a perfect example of, you know, it's just a store of value. It's just a speculative asset. Yep. I mean, it's a parody, and yet it was a 2 billion market cap at one point, right? Yep. I don't know what it is now, but it's certainly not disappeared. And so that's endemic to a large amount of the remaining asset class. So I think we need a clearing out where we can begin to establish some fundamentals. And people can genuinely begin to invest, make long-term investments. Of course, you need speculation in the market. You need traders and all this kind of stuff. But I think the problem at the moment is the speculators by far outweigh the value creators.
Yep.
And that's not going to be good for the speculators, because ultimately you're assuming that you can be ahead of the market. So you can move before the crash, or you can preempt it. And there'll be a lot of luck involved in that play. I wouldn't like to call it, and I've got 30 people, and all we do is focus on analysing the market. And
I compare it to playing poker.
Sure.
You know, you can be the most skilled player and lose with a bit of bad luck, and you could be a terrible player and win with a bit of good luck.
That's right. And the challenge is that, so I had this conversation. We're helping a portfolio company in their raise at the moment. They're doing a very large SAFT. And, you know, we're speaking to a range of investors in our network, from corporate VCs, family offices, hedge funds, traditional VCs, crypto VCs, and then kind of trader groups, very loosely connected, you know, 20 to 100 people groups that kind of invest individually but as a collective and do collective DD. And I had the perverse conversation where we were talking about the valuation of, or the assumed market cap of one of the projects we were involved in. And he felt it was too high, not because it wasn't ultimately worth that in terms of the value. So they've got very large corporates already engaged. They've got an existing product and an existing business with an existing team, already worth several million because they've taken VC funding. And they've gone on a journey for over a year in converting into what will be a tokenized open source proposition. But because they didn't have enough FOMO. And he was literally comparing it to an equivalent in the market and saying, you can't justify the valuation against that because that one has lots of FOMO around it. Nobody knows about this one. Nobody in the crypto space knows about this one. Yes, I get it's actually got inherently more value. Mm-hmm. It's got a working product. It's got customers. But that's not valuable. That's not going to give me an uptick at the point of ITO. So even though he understood the fundamentals, he said there's no point investing against them because the rest of the market doesn't understand the fundamentals. And I kind of sympathize with it. At the end of the day, there's no point, if you're a trader, looking for fundamentals in the market right now is almost not worth doing because if the rest of the market doesn't understand them, the price will not reflect it.
I've tend to find with my trading that fundamentals come into play when there is a bit of momentum because it can support the momentum.
Sure.
And, but silly things like a rebrand or a new website can carry momentum, but the fundamentals don't come into play until the market maker wants to start moving the price.
Sure.
So it's all really interesting. So one of the reasons I wanted to... Actually, have you read the John Pfeiffer, Pfeiffer? I can't remember his name, white paper he did on valuations. So it's a really interesting white paper. I'll send it to you and I'll put it in the show notes. But he was talking about most protocols and utility tokens are going to be overvalued because they don't have the... velocity when they hit
velocity
the market.
Of money.
To justify them. But he still thinks that Bitcoin is potentially undervalued, and I personally kind of agree. And I think the two that I support is Bitcoin and Monero. In that, I kind of have this feeling we need global currencies. We need global currencies for tech, for machine-to-machine payments, and that could only ever happen in a decentralized way, right?
Yeah.
You couldn't ever centralize it, have it run by one government or the UN.
Sure.
So if we were to have global currencies, whether they are IOTA, Bitcoin, Monero, actually, if they could be potentially undervalued or a decent speculative investment compared to, say, a protocol.
Yes.
What are your thoughts on that? Because you were invested in IOTA.
Yeah. So I like Chris Boniski's distinction between, and it's a grey one, but distinction between currency and commodity. And whilst a kind of crypto asset that's a commodity might have currency-like features, so it could characteristics, so it could be being used just for store of value where it's perhaps lacking utility or utilities being built in a network. But our focus is primarily on the commodity piece. So, for example, we're looking at infrastructure. We have one investment that's some ex-DeepMind guys, very early DeepMind team, that have built a protocol bottom up because they want to create things like autonomous economic agents. So they want emergent intelligence. And they said no protocol supports that, neither technically nor the economic design. So because the behaviors that they need to incentivize within that digital economy are very different to a general purpose ledger. So, for example, the thing for them is making data available. It's having a ledger that learns, that self-organizes, and it's quite mind-blowing, actually, the innovation. It's called Fetch.ai. But the way that they've gone about, we've been working with them for 12 months now with Imperial College. We have a 3-year R&D program with Imperial College, the economics department, the computer science department. And we've worked with them to say, okay, if we're going to design the digital economy for AI, for a decentralized AI infrastructure and marketplace, who are the stakeholders? What are the behaviors today? What are the behaviors we don't want? What are the behaviors we want to incentivize? And bottom up, begin to apply game theories to how you want this economy to scale. And so there are many things that come into that. Velocity of money is one of them. But there are a number of other aspects when you're thinking this through. So for us, when we're designing a token or a set of tokens, there might be more than one in a particular system. The idea is how do they become the kind of the commodity, where it's the gas or the oil that's going to power this system. And what's the appropriate level of scarcity for that to retain value? And we're the first VC to hire a head of crypto economics.
I saw that, yeah.
A guy called Eden out of Toronto, and so he kind of his focus is specifically on this. It's how do you design these things, and this for me is actually the most exciting thing about what we're doing here, because if you think about it, we're at the point of probably unparalleled innovation and experimentation in socioeconomic models. And we're going to be able to quantify how they perform almost real time. And in theory, that experiment can be continued because you can fork them.
This is, was it Brock Pierce who said last week, essentially we're running a continuous live split test?
Exactly, yeah. And that's really interesting on a number of levels. So one, for the first time ever, we're able to hard code monetary and fiscal policy into economies. In this instance, it'll be digital economies. That's like the holy grail for an economist. How do you make a market orderly, or an economy function in an orderly way? Normally, you have some basic levers that you can kind of inflation and deflation and whatever, and that's it. You're kind of out of your toolkit because people are irrational. I think what's really interesting here is, especially when you're looking at digital economies for AI or bots or whatever, is they can behave rationally. So as long as you create the right incentives, the likelihood is that they're going to take those incentives, and where human might be less perfect. So this is going to be a huge experiment in socioeconomic design. Hopefully that then starts to trickle through into the wider economy. And as an asset class, I think there should be a premium on this asset. So when you say, how do you value a particular token? Well, firstly, you're valuing a digital economy. You're not valuing a company. Generally, it's a bit of a blur because, of course, there's some plays out there that aren't either totally open source or the success is very much linked to a proprietary base business. There might be low correlation between the token and the business. So
you're essentially saying the company behind the token could almost be valueless.
Yeah. So we've got 5 investments coming off the ramp between now and the summer. Almost all of them we've been working with them for at least 12 months, where they're existing businesses, existing products, existing customers, often blue chip customers, already worth several million, already taken VC investment, but they would benefit from network effect. Mm-hmm. And so being able to open source is kind of, the dream for them to be able to open source what they're doing. But, prior to being able to kind of tokenize value in that system and almost have this kind of crypto equity, that would mean, foregoing proprietary IP and all this kind of stuff. And, the only kind of reward for open source was fame, right? Ego. Mm-hmm. Now, open source is a business model. It's a viable business model. And if you think about those thousands of startups that I mentioned that we spoke to, that were equity-based proprietary businesses up until beginning of last year, 90% of startups that come to us now are open source projects. I mean, that's amazing. Mm-hmm. If you think about the large majority of technology startups will now be open source. Because what that means is, and it's not always so black and white, but we're no longer reliant upon any one team to execute. As long as there is genuine technological value somewhere, you could just seed part of your technology, open source it, which is what some of our projects are doing, and then allow the community to kind of pick it up. It could be forked once, it could be forked innumerable times in parallel. And what's interesting about that is, if you think about how equity-based startups are financed, 90% of them fail in the first 3 years, sometimes in the first 2 years. So that's billions and billions of VC and angel capital just wasted, because when an equity-based proprietary startup fails, IP's lost, know-how's lost, team dissipate. I mean, a fail is a real fail. Here, you can have one team who fail to execute, or part or all of the community disagree with the direction that they're taking it, or the management, the governance style, and it can be reformed. And so it's almost like a biological system where things can evolve. You can have offshoots that kind of get so far and die off, and therefore, again, in theory, if you were to fork and maintain the ledger, so to maintain the holdings of the people from the genesis, it's almost like a cap table. It's a living cap table where your holdings preserved in any child of the original kind of parent. And what that means is that you're less likely to lose your money. In fact, you could double your money, as we've seen with Bitcoin. Having a child doesn't make you half a man, right? No. Which defies, which for me demonstrates it's more biological in nature than this kind of very brittle, fragile, equities-based model. And therefore, you could argue that there should be a premium on crypto assets because they're more likely to retain some value as long as there is underlying technological innovation there.
So long term, to get through the speculative bubble and have this innovation continue, crypto economics seems to be one of the most important areas and skills required in the space, and probably most lacking.
Yeah.
I mean, how many of these token-based businesses are actually looking at the economic model of their tokens?
Well, that's it. And most aren't even thinking of themselves as a digital economy, and they're kind of still thinking of themselves as a startup. I think the two things, if you were to look at what are the fundamentals, and again, to be honest with you, this probably won't make you any money this year. It'll probably save you some money. One is the economic design that goes into these solutions, which is incredibly complex. I mean, to be honest with you, even I'm not qualified to do that. I have a dedicated team and partners. And then you have the governance. And I think, if I were making an investment now in market, one of the challenges is it's incredibly opaque. So there's a lot of information asymmetry. If you're not on a foundation or you're not in with the founders, it's very difficult to know what's really going on there. There's so much FUD. I mean, even mainstream media accidentally pick it up, right? 'Cause it's such a fast-moving marketplace, and everybody's talking up their book and they're talking down everybody else's book, and so it's very difficult. I was speaking to an editor of a leading US tech publication, probably one of the leading ones, and he was genuinely frustrated because he couldn't get to terms with, for example, IOTA. He said, I don't know who to believe. I've got one camp telling me it's, aggressively telling me it's got all these problems, and I've got the other camp telling me that that's all FUD. And so if he's not qualified to distinguish between fact and fiction, how is the average person who's maybe day trading on the side going to do that? Or even a generalist angel investor. And
that's something we've seen quite a lot recently. I think that the most evident example is Ripple and XRP, where Ripple appears to be an amazing business, doing some really amazing, innovative things. Yet pretty much everybody I know who's been trading for quite some time says the XRP token has little to no value. Yet at one point had a market cap, what was it, 125 billion, and one of the owners, I think, became something like the sixth richest guy in the world for a couple of days.
Yeah, no, it's crazy, and for me, that's also indicative of how the market's changed more broadly. So probably up until maybe even midway through last year, most people investing in the space were fundamentally aligned to decentralization and a lot of the principles of Bitcoin. I think the large majority of the market now, as you can see, people moving into altcoins. I don't think you can even warrant the word altcoin now, right? Not Bitcoin.
Yeah, not Bitcoin.
And a lot more money's moved into that market now as a portion of the capital. And that's, I think, two things. One, because new investors to the market don't care about decentralization.
Nope.
Or at least not as much. They care about usability, they care about adoption. So they're not puritanical about it, which is not a bad thing, I think, to be honest. It's a bit more pragmatic. However, to the extreme of something like Ripple, where A, they might not even be able to differentiate between centralized and decentralized, or the inherent value of a token and its utility in a particular system. And equally, you've got retail investors or hedge funds moving in, and to be honest with you, they don't care, right? They want up and down. Well, they want up, largely.
Yeah, I mean, it's like they don't care that Tesla is an electric vehicle versus GM, which is still burning fossil fuels. They care about the fact that it's innovative and they're going to make money.
Sure.
And they don't care about centralization or decentralization. There isn't like a fundamental belief.
Right.
So it's just speculation.
Right. And it's that momentum trading. And so, I think you've got a less discerning market, and equally one that doesn't care about the fundamental principles. To a lot of people, certainly that attracted me to the web. And look, I'm here to make money as well. Make no mistake about it. But I also, believe that Web3, without getting utopic, could be better distributed, more equitable than what we've currently got today. And actually, I think in this blog post I did last week, when I said I felt I needed to have this kind of haircut on the market, I referred to it as getting back to the future, because a lot of us, the focus is on building the future, and everybody's got distracted. Everybody's checking a coin market cap far too many times in the day, and paying attention to these micro movements, when really what we're talking about long term is a multi-trillion-dollar market. The danger is, and this is why I kind of welcome this haircut that we've got, hopefully it being sustained, and I wouldn't even mind a little bit more of, even though it hurts my holding in a number of things, is because there is a larger existential threat here, which is Web 2 and the platform monopolies with it in Web 2. So the FANGs and BATs, Facebook, Amazon, and then the equivalents in Asia, because of the data advantage that they have, they're building up an AI advantage, to the point whereby through kind of recursive learning, the advantage compounds, and you can almost never catch them up. So I think we're at a tipping point, where we have the opportunity to build a new web infrastructure that's more decentralized, where the value of things like AI can be better distributed. Even AI cooperatives, the idea that we could collectively, communally own AIs and intelligence that's derived from our data. We have a small window to kind of deploy that new web. And if we don't, it doesn't matter how good it is, we'll be too late, because at the end of the day, the average user will always pick speed, efficiency, cost, and convenience. And so if what we're building is not competitive from all of those things, decentralization being last, then we won't have a competitive Web3, and we pretty much handed over dominance to Facebook and Amazon, and they're going to control more of our fewer and fewer of them are going to control more and more of our lives. And
in this commodity space within crypto, which you are invested in, if you're taking a fundamental approach to the crypto economics, to make these economically viable companies, do you call them companies? Economies.
Yeah.
So if you're doing that, if we do have some considerable crash, and like after the .com crash, the VC started looking at more fundamentals of the team and the business, there is a chance that a light will be shining on the things you're involved in, and then they also will become speculative bubbles because you've justified the economics of it. Is that a risk to you? Do you want more stable growth, or do you not care?
So firstly, when a crash happens, it will bring down the whole asset class.
Yep.
Precisely because there are no fundamentals, and nobody can distinguish between what has value and what doesn't have value. However, it will completely kill off some, and others will kind of just be there, almost frozen for a little bit.
Well, one thing also, though, that's different from companies is that companies, when they run out of capital, die.
Exactly.
But tokens, I mean, the BitConnect token is still tradable.
Exactly. Yeah.
So things still become tradable because it's the computers doing the work rather than the company.
That's right. No, and that's it. So what will be interesting is the good tech which has community, proper developer community, not just traders. It will be sustained, and so even if the foundation that's supposedly driving it run out of money, and by the way, this is a huge risk, just basic treasury management, I come back to the governance piece of these things. And sadly, most people don't have visibility on this, so generally we don't trade in market, because right? if we can't see how the money's held, are they holding it in Bitcoin or Ether? Have they converted some to fiat? So have effective hedging and treasury management. A lot of these guys, when the price goes down on Bitcoin or Ether, they haven't converted it into fiat. They can't pay anybody, and they'll go bust. So a lot of the foundations will just be wiped out. But the community will be there, the tech will be there, and there'll be an opportunity, Phoenix from the ashes, for community members, maybe multiple groups, to say, okay, we're going to pick up the technology and we're going to drive it forward. So I also think from an investor perspective, things that aren't totally open source, and I appreciate questions around IOTA, and I always say I understand the rationale as to why it's not totally open source now, because of its design and how it scales. I believe it will become open source, and if that didn't happen quickly enough, then I would have serious concerns as an investor, precisely because of this point, which is even if a winter happens, it being open source is almost an insurance policy on my investment. And saying that, if you're a trader, it's a great buy opportunity. If you've only got a small portion of your capital deployed in the market at the moment, maybe you've taken back what you outlaid and it's just pure profit. It's going to be a huge buy opportunity, because stuff with lots of value is going to be bargain basement, and you can go in and start investing against fundamentals. But yeah, it sadly, I mean, it doesn't make any difference to us because we don't day trade. So we stupidly are locked in to our investments. We opt to be locked in.
Some maybe not stupid though.
Well, for me, so for those where we're involved in the underlying design, and we've taken 12 months and we've effectively underwritten that process. And IOTA wasn't one of those, by the way. And we've invested in Ocean, and Ocean wasn't one of those either. But those where we're more involved, effectively we're acting as a signal to the market. And so, we have a not insignificant amount of the monetary supply for deploying the capital, for doing the advisory. And we only get that whilst we retain integrity. And when people know that the things that come out of Outlier are going to retain value, they're going to be sustainable, they could survive a crash. And so, we need to demonstrate that we believe in the long-term viability of it. So what we have chosen to do is our tokens effectively vest alongside the founding teams. And usually that could be up to 3 years vesting cycle.
Okay.
Now, in some instances where it's a business with existing IP and they're open sourcing it, there is a transaction there. They get that monetary value back because they have to remunerate their shareholders that have put in the initial capital. But for any new deployments, they only get paid on delivering stuff. So this comes back to this governance, which is pretty standard in the VC world, right? Course, investing. Yeah. You don't get given a load of money until you do something, and your holding doesn't. It vests with progress and what have you.
So are you also providing some kind of mentoring support as well, which obviously for some of these blockchain-based businesses, they're not getting. They're raising a bunch of money on an ICO, and they're just off doing what they want to do.
Yeah.
There's no support from a traditional structure.
Yeah, so we regard ourselves as a venture platform. To date, a lot of the focus has primarily been on kind of pre-ICO, because that's where everybody is. And as I said, the large majority we've been working with for several months now. As a number of them are coming off the ramp before Christmas, before summer, we're increasingly developing our competence around this kind of post-ICO phase. And so focus on that will be supporting on the governance. It will be corporate engagement and adoption, so leveraging this corporate network I spoke about earlier. Actually, many of those we're getting to co-invest. So, we were involved in the discussions between Bosch and IOTA, and we have a number of other of those looking at our others in our portfolio. And then most importantly, it's scaling community, developer community. Because ultimately, if you're going to value an open protocol, it's going to be how many people are deploying on it. Okay. And I think, the standard is Ethereum, putting aside the debate on how useful those things are, but Consensus have done a great job at building this ecosystem around Ethereum, both corporate and kind of individual developers. And so a big focus for us will be, when I was talking about the convergence thesis earlier, we have a vision for the Web3 stack, and it starts with IoT and sensory data. It moves up to data marketplaces, and then up to kind of AI and autonomous systems. And we're investing at each layer. Sometimes we might even have two in the same layer, but at the moment we're kind of picking what we would think will be the leaders in each layer of this Web3 stack. And so in theory, they should be very complementary to one another. So I know IOTA announced a partnership with Evanim, who are doing the sovereign token that's not live. It will be live this summer, which is an unbelievable project.
Is that another one of yours?
Yeah. So we're the lead investor. We've been involved with them for 7 months on the design phase. And so they're looking at identity and verifiable claims. And that can be verifiable claims between people, things, machines, objects, sensory devices, or organizations, including autonomous organizations. And so what that means is you can do verifiable claims in a zero knowledge proof environment. So I can prove something is true or not without you having to reveal the data behind it.
So IOTA becomes important because it offers no-fee transactions that support this infrastructure.
So the relevancy is, if you're going to, for IOTA as a network, to be able to have transactions between machines, you need identity. How do you identify a machine? And how do you have that machine pass data to another machine and trust the data and the data quality and all this kind of stuff? So identity, it's a fundamental layer to all of these things, and it's no different for anything in the machine economy. We also have a play which is doing it's a bot marketplace. The idea is you can sell constituent parts of the bots that will be trusted. They always have their own DNA. You can configure a bot and you can trust it in totality. It's not going to do anything malicious because of the DNA of its constituent parts. That's called Botanic, and they're doing a seed token. So all of these things are complementary, and the reason why I mention that is our plan is to begin to build an events platform for convergence. Okay. So it won't be a DevCon for one protocol, it'll be a DevCon for the whole stack.
Okay.
And so we're looking at doing a big conference towards the end of this year, doing a number of hackathons. We worked with DataRella, did a hackathon in Poland with IOTA. We're forging a lot of relationships with academia. Imperial's one of them, but we're speaking to any number of leading technical universities in order that we can build this developer community, both virtual and then big physical conferences. So when we have a new investment, we can say you're going to be introduced to 20,000 developers all interested in this space. So very quickly they build up that traction. For me, that would be the fundamental.
But you're also working with the Wall Street Blockchain Alliance, so it feels like to me you're quite sensibly going, right, let's build the developer community this side, but let's also make sure the capital is available too.
Yeah, so the Wall Street Alliance is slightly different, and the name's a bit misleading. So as an organisation, it is largely, Wall Street players. The reason why we joined that is more from a regulatory perspective.
Oh, okay.
So we have a guy called Greg, based out of Toronto again. So we have a London, Toronto office, and one in Germany very shortly. So Greg, all he does all day long is speak to regulators and lawyers to the point whereby he starts to talk like a lawyer. You can't get a straight answer from him. But he does things like he went on a Wharton a retreat to Wharton Business School for a weekend, and it had every major regulator from around the world there with Chatham House rules, so you couldn't report what one said. All the leading law firms. We were the only VC that were invited to go, and that came through the alliance. We got an inside view on how regulators were thinking about this as an asset class, what their concerns were by jurisdiction. So, for us, the most important thing, because we're helping people in terms of issuance, and if you were to look at risk, not just risk for issuance, but risk more generally in the market, regulation has to be the key one. Having an understanding for so for example, France and Germany are talking about taking to the G20 a proposal for regulating cryptocurrencies at the moment. Equally, we're at the moment talking to different parts of the UK government, FCA, HMRC, to say, look, post-Brexit, this could be a huge opportunity. Because if you think about it, what does the UK have? Well, it has capital markets that's slowly leaving. So if you can tap into an entirely new capital market with a friendly regulatory environment, and the FCA's got really good form for being creative and supportive of emergent financial products, peer-to-peer lending, equity-based crowdfunding. People still use, they passport in other markets in Europe, UK licenses, because they still don't have them in, say, Italy or
right,
wherever.
okay.
So the FCA has been really forward-looking. So for us, we've got forward-looking regulators that are really good with fintech. We've got very healthy angel community. A large part of VC activity was out of UK for Europe. A lot of the European Bank for Investment was backing UK investors. 50% of money came from Europe. We've got professional services, accounting firms, lawyers, all centred around capital markets. So this is it.
And we will have self-governance.
And in theory, we will have self-governance.
Depending on the deal.
So, we could make it a friendly environment for issuance. We could make it a friendly environment for issuance. It's a tax question, actually, for as a market to sell into, giving greater surety as to definitions between utility token or commodity token and a security token.
Right, okay.
Engagement with regulators is something we're putting a lot of time into. I wouldn't say we're lobbying, but we're certainly helping them navigate the space.
Sure.
And it's certainly helping those in the UK to say, look, if there was one opportunity where you could say this could be an advantage to Brexit, it's probably this.
Interesting. So in terms of, you've talked a lot about essentially the platforms are being built.
Yeah.
We're establishing it. How far away do you think we are from some truly large-scale, successful, decentralized blockchain businesses? And what are the things keeping us from that happening?
Yeah, so, I think realistically, if you're trying to build an app-based business, so a DApp-based business or something like that, the infrastructure is not going to be there for you for 18 months to 2 years.
Okay.
And honestly, I would say if you're investing in dApps, you're throwing your money away. Because, if you speak to anybody, and we're fortunate that we have this kind of corporate ecosystem who've been doing proof of concepts for the last 3 years. They've kind of got these proof of concepts that are a guilty little secret in their drawer that they don't tell anybody about because, they got a load of money, they convinced senior management that they should be playing with a given protocol, and CryptoKitty comes along and kills it all. And we have partners that have actually deployed commercial propositions on. And I don't want to sound like I'm beating up Ethereum. This is not specific to Ethereum. It's almost all infrastructure, including that which we've invested on at the moment. It's very difficult.
Well, even Bitcoin. I mean, that's the big war over the last 2 years. Have been scaling issues.
Well, exactly. Yeah. We need to focus on the plumbing and the piping, the infrastructure. The thing that interests us most about Evan and the Sovereign was identity. Until you solved identity in a decentralized environment, forget it.
Right.
You're going to have to rely upon central parties massively, major intermediaries. There's some basic things: reputation, trust, identity. And I mean, look, let's face it. If you look at the exchanges at the moment, we don't even have a orderly and functioning means of exchange, which, to be honest with you, is why I think so much heat was getting trapped in the system, because it's actually difficult to take your money out of the system.
Yep.
By the time you'd got around to maybe going, I'm going to move it all out into fiat, it was back in green, and you go, I'll go back in again. So in a way, that's kind of trapped a load of money in the system. So look, I'm really bullish on long term. This is the next phase of the web. It's going to be a multi-trillion-dollar market. But if you're saying, well, and we get approached all the time by people saying we're building an app business, we're launching an app token to do logistics on Ethereum for whatever use case. And I'm like, well, good luck with that.
Well, I mean, I say to everybody, I've got a group, and I say to everyone, or any family or friends coming in, they said, Pete, you know about Bitcoin, or you know about what should I do? And I always say it's a 3 to 5 year play.
Right.
But if you pick the right investments, you could see some great growth. But it's 3 to 5 years. But in that, are you saying it's just a matter of when, or do you see any scenario where these things just can't happen? Are the problems so difficult they can't be solved?
Well, so what's really interesting about this space is, and it's really evolved over the last 4 years actually, since I've been involved. It's one of the greatest brain trusts on the planet. I mean, it really is attracting the great and the good. People infinitely more intelligent and technically competent and able than me. And so I have great confidence that if any community, if you can even call it that now, because it's just so broad and diverse, is going to solve this, they will. And the great thing is this tokenization has given a very real incentive to solve it. And because of the open source nature, again, you don't have to get it right first time. You can have multiple shots at refining and tweaking as it evolves. So I'm really confident that most of the big challenges that we're going to be facing, Tim Berners-Lee did a really good article at the end of the year in Wired about the web's broken and how can we fix it. Mm-hmm. And almost all the things that he talks about in there, I believe, will be solved by this community. And that infrastructure is going to be laid down over the last 12 to 18 months. So if you imagine that you could get in on a Sovereign and an Evanim, let's say they solve the problem that they're trying to solve. I mean, it's huge. How do you even quantify that? I wouldn't know how to even quantify that. So there is definitely a lot of opportunity. I think even with the haircut that's happened, if you're looking at what's in market at the moment, I think it's all overpriced. I think it's very difficult to find value. It will go down. It will go down further in value before it's going to go up over the course of this year. But that might be fine. You might just say, well, look, I'm going to put it in now. I'm going to forget about it for 2-3 years. That's one way to kind of approach it. But I'm more interested in what's coming through now, and I would say that, right, because I've got 5 coming online. But I do think if you look at technology cycles, it's usually the second, third generation where you actually get things that work and scale.
Yep.
Because you have all the hindsight of generation 1 and 2 that have gone before it. And I think, looking at Tangle and the DAG, and they're not the only one deploying DAG now. There's like 3 or 4 going to be coming out this year. These are direct evolutions of things that proved either they had very narrow utility, so they wouldn't serve as general purpose, or they couldn't be applied to specific problems. And so I think what's more interesting is not necessarily what's in the market now, it's what's going to be coming online and over the next 18 months. I think that's where you're going to see a lot of value, and it's getting in on those kind of pre-ICOs where there's a discount, there's some value. Now, even those things are, they're not going to be cheap, right? Mm-hmm. They're still going to be assuming a market cap based upon what they think is sensible in market now. Mm-hmm. But at the very least, you're getting a discount on what that might be.
But that will increasingly likely probably just go to the hedge funds and the large-scale investors, rather than, as the market matures, it won't be somebody who wants to buy 5 Ethereums.
Yeah, well, so it's interesting, and this is the challenge. So we're a key part of the success of a token will come from its distribution. And so one of the challenges at the moment is because of the regulatory uncertainties, and this is something that we've advised to, well, actually, I don't think there's regulatory uncertainty. I think it's very clear. There's lots of clarity. If you really speak to regulators and you really speak to lawyers who are prepared to give you an opinion, I think there's a very clear distinction between what is a security. Mm-hmm. Right? It's linked to an underlying asset, yes. It promises dividend, or you market it promising return of investment, all these kind of things. Securities laws already exist. Mm-hmm. You don't need new laws. They already exist, and those markets function in a very orderly way. And I think the FCA have actually been the SEC have actually been very positive in their engagement, where people are clearly violating securities laws, unbeknown to them, because they're just not bothered to check. And they've said, sorry, can you stop marketing that? Which is unbelievable. You think that's the SEC. Normally, they just lock you up.
But do you not think these security laws are outdated? In that, actually, if they're a security, at least there is some kind of understandable benefit to owning some of these tokens.
So I think I don't think it's out of date. I think that the security token market will be bigger than the utility token market over time, because I believe everything will be tokenized, fractionalized, and securitized. Okay. So if I'm going to build a massive property development and it's going to cost me 100 million and it's residential or commercial, increasingly I'm not going to go to a bank to do that. I'm going to pre-sell the properties. And that could be fractionalized down to $5. I don't care. And then you have this very healthy secondary market where people are speculating on its success or not. I think high value assets and a lot of alternative assets like art, fine art, that are inaccessible to most people because the ticket price is $100,000 or more. Increasingly, these asset classes will open up because they want the liquidity of anybody and everybody to be able to invest. You think about the market cap of fine art in the alternative asset space. Well, if you could bring in retail investors into that to buy fractions of a Damien Hirst, you bring in several billion into the market in terms of liquidity. So it's in everybody's interest to open up these asset classes. So I think that's going to be huge. At the moment, there is no liquidity for security tokens because exchanges don't want to list them. But that'll be sorted out. Right. There's already some exchanges, I think one in Gibraltar, that's looking at doing security tokens and utility tokens. The question then becomes more of a philosophical one, which is in the States, you want accredited investors only, which is
plus 1 million.
Plus 1 million, yeah,
and 100,000 income.
Yeah.
Do you not think that's unfair though? Because look, there are probably people with over 1 million who might not be smart investors. There's some really smart guys out there who have a very low income. Yeah. Do you think it's actually fair?
Well, personally, I don't. But then I live in the UK, and in the UK, all you have to do is tick a box and say you're an accredited investor. Exactly. Which is why we've got the healthiest angel environment in the world, I would argue. Uh-huh. It's why the majority, not the majority, Europe is the leading market for ICOs this year over the States. It's a huge opportunity because we have a more open system for early stage investing, and it's served us very well. So I'd rather not comment on. I think that's a failing of the States.
Yeah.
I think it's a huge opportunity for us in Europe, but it is the way that it is now. If you go back to the commodity token piece or the utility token, what we've done is where you can't until you can point utility. So until somebody can buy the token and actually use it for something, as far as we're concerned, you're promoting a security. If you're letting somebody buy that, and actually you can't do anything with it other than speculate, it's a security.
Somebody called it a debt token the other day.
Yeah, right, exactly. I mean, but the point is that you are marketing something on the promise that it will have utility. Now, if you happen to then deliver utility, you might be okay. So Ethereum didn't necessarily have utility in the beginning with Ether, but over time it delivered on the promise, and therefore, everybody's okay. Nobody's in jail from Ethereum. But let's say a crash happens, you run out of money, or one who gets hit by a bus, or whatever. All these things that happen in life, and you fail to deliver utility, the utility you promised. And as we're seeing with things like Tezos and what have you, failure to deliver on the promise when you've made that promise to a retail investor is a very dangerous spot to be in. So what we do is, in this early stage of underwriting, us as professional investors and our network that we kind of syndicate out to, we do SAFTs. So that is a security. You have to be an accredited investor to be able to participate in an institution, and that converts to a token at the point that there is utility, and only at that point would you do an ITO.
Right. Okay.
So what we're doing is we're saying, look, until the technology's there, even a basic MVP, and you can demonstrate that you've designed utility at its very core, you should not be allowing users to buy that token. Now, at the point that you can use that token, I think there is no law in the world that can tell you that's a security, because at the end of the day, it's like a ticket. The secondary markets for tickets. I buy a ticket to Adele or whatever, and if I want to sell that in the secondary market, that's entirely up to whomever, but it just gives me access to something. And it's an API key or whatever the function in the system. And I always say, nobody from Ethereum's in jail yet. Some came close because of the DAO, but nobody from Ethereum's in jail yet. And until somebody from Ethereum's in jail yet, the concept of a utility token exists. And
it's not going to happen, really.
No.
Okay. Cool. This has been great. Really good. I've got hundreds of questions I haven't even covered yet. I think I'm going to kind of wrap it up a bit now.
Sure.
What would be a good way to kind of finish it off? What's the future for you and Outlier? What do you think the market needs? And then if you can just, do you want people to be getting in touch with you on specific projects? If they have, do you want to let us know what people of interest you've got, and how people can get hold of you?
So, our focus at Outlier, it's interesting because we've got our annual strategy meeting today, immediately after this.
Right.
So, we've actually spent quite a bit of time thinking through the 3-year plan, and this year in the context of that 3-year plan, we've built the beginnings of this venture platform. We're never going to be an ICO factory, so we'll only be doing a handful of deals each year that fit within a thesis. I think having a thesis is really important. So for us, our objective is to be known at Outlier for quality and to be a very strong signal to the market. And so anything that dilutes that signal is something that we don't want to focus on. So the way that we want to be regarded by the market is when people see that Outlier have invested, and especially when they see that we've been involved in the design and implementation of something, that they know proper diligence has been put into the design of what this thing is. It's probably taken over 12 months. That the team behind it are going to be credible, that the technology is innovative, that there will already be degrees of corporate adoption, that there will be appropriate governance, and that ultimately their investment is as safe as it can be in a high-risk environment.
Yeah.
And at the very least, it should survive a winter or a crash or anything like that. And so the main thing for me is, if you, we're doing a revamp of the website at the moment. It's not so easy to find, but we have a newsletter, have a daily newsletter, where we have a fairly balanced and impartial view of the market. And in that, we feature any investments that we're making. And so, I would encourage people, to follow what we're doing, and hopefully if the rationale as to why we've invested makes sense, check out the tokens and protocols. I don't promote investment opportunities to people, but we always articulate why we've invested, the rationale and the thinking. And what we're really keen on is not necessarily to say we want more investors to kind of follow into the tokens we're involved in, but certainly developers, people that can add value to the community beyond just capital, who can kind of come and contribute and help these things scale. Because ultimately, until we have developers committing and building, a protocol is nothing without a developer community. And so that's kind of the focus for where we want to go as a business. So hopefully we get known for that. And, we like to think that we're the leader in Europe for what we do. So we want to try to entrench that leadership position. And our ambition is to kind of, be in the top 5 globally in the space. And that's the frustrating thing is that when you see these tables done by whomever about leading VCs in crypto, it's always the amount of deals they've done and the amount of capital they've deployed. It's very easy to spend money. The question should be, what is the quality of the portfolio? So if they've got 5 logos on their website, but all of them are, billion plus cap, with lots of developer commits, significant code on GitHub and traction, that for me is infinitely more interesting than having 30 logos and being able to say I've deployed $1 billion in capital.
Yeah.
So it's that nuance, it's that kind of quality, and hopefully being a signal.
Great. Listen, thank you so much for this. This has been a really interesting interview. It's probably the one I've looked least at my questions, so I really appreciate your time, and that's been great.
Well, happy to come on again, and we've got other members of the team, ranging from the people involved in crypto economic design. We've got a head of research that tracks the market with the team of analysts.
I think Eden would be a great one to have.
Yeah, absolutely. So, we're always happy to chat.
Great, thanks.
Awesome.
So how was that? I hope you all enjoyed it as much as I did. It was probably my favourite interview to date, as the conversation flowed pretty freely. I probably could have talked to Jamie for hours. Maybe it's just me getting used to doing these podcasts now, but I really enjoyed the way Jamie went into detail on how these new economies should be valued. It's such useful information for us as traders. There were loads of things we didn't discuss, but I will definitely get Jamie back on the show at some point, and hopefully his head of crypto economics too. As ever, please do support the show. Follow me on social, leave us a review on iTunes. It's all appreciated. And if you have any questions, feel free to reach out to me. Okay, good luck with all your trading. I'll see you all soon.